Alright, hi everyone. Welcome to today's pre-market live analysis session brought to you by IC Markets. Right, trust you've all had a great weekend, spending time with family and friends, and let's begin the brand new trading week. Alright, of course, before we begin, please take note of the disclaimer. Right, this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading Forex and CFDs as they carry a high level of risk to your capital and you should only trade with money you can afford to lose. My name is Ketan Rameshchandra, and this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the charts and trading view, let's take a look what's coming up on the economic calendar for this week. Right, there's quite a few things going on, but I want to bring your attention to the US jobs data that's going to be released this week, as well as a central bank announcement by the Bank of Japan. Right, so we have the ADP employment report. This tracks the private payrolls growth in the US. That's going to be released on Wednesday, 30th of April. And then on Friday, we have the highly anticipated non-farm payrolls and unemployment rate that will be released by the Bureau of Labor Statistics. And sandwiched in between, we also have the Bank of Japan dropping its monetary policy statement as well. Right, so this is the calendar for this week, right? Take note that the time that's displayed here is on GMT time. So from Monday to Wednesday, right, this is the first half of the calendar. As it's US jobs week, we also have JOLTS job openings data that's out on Tuesday, 29th of April at 2 p.m. GMT time. Right, job openings have been trending lower, right, over the last few months, right, and after falling as low as 7.57 million openings in February, job gains are now expected to edge lower once more, falling to 7.48 million. Now, we also have inflation data out of Australia on Wednesday, alongside with PMI and PMI reports out of China as well. And then at 12:15 p.m. GMT, the ADP employment report is going to be released. And then on Thursday, right, Thursday, the Bank of Japan is going to be releasing its monetary policy statement, where they're expected to maintain its key policy rate at 0.5%. And then after which, BOJ Governor Kazuo Ueda will be delivering his press conference as well. Now, once again, right, the actual or the stipulated time for the statement release and the press conference has not been officially declared, but typically we can expect it to be released between 2 and 4 a.m. GMT time. And then on Friday, right, at 12:30 p.m. GMT, the Bureau of Labor Statistics will release, right, the non-farm payrolls report and the unemployment rate. Right, taking a slightly look at ADP employment, right, we've seen after falling down, after growing just about 80,000 in February, private payrolls growth rebounded to 155,000, right? This also follows an upward revision for the month of Feb, rising up to 84,000, right? And the figures for March, not only did it rebound strongly off February's figures, it also came in much higher than the forecast of 105,000. So pretty good private payroll growth for the month of March. Looking at non-farm payrolls, right? So non-farm payrolls jumped strongly in March as well, with 228,000 jobs being added to the US economy, well above the forecast of 135,000, and this also marked the highest figure in 3 months. However, right, we saw figures for February being revised lower down to 117,000, right? So both the ADP and Bureau of Labor Statistics reported stronger job growth for the month of March. And looking at the respective forecasts, right? Looking at the respective forecasts, we're expected to see jobs being added once more, but at a slightly slower pace. For ADP, we're expecting now 123,000 jobs to be added, while for non-farm payrolls, we're expecting around 129,000, right? Okay, so with that now, let's dive into the charts and trading view and begin the analysis on the dollar index, of course. And let's begin with the dollar index. And we'll be beginning with on the daily time frame, of course, right? So look at it here, right? This is the chart for the dollar index, and we can see in since over the last 4 weeks now. We've seen the dollar index lose almost 10%, I believe, or even more than that. If you look at it from this high in March, end of March, till the lowest point last week, we saw the dollar index drop 6.4%, and since mid-January, it has fallen well over 11%. Right, we're seeing investors lose trust in the value of the US dollar, right, and that has caused them to sell off, right, and that naturally would mean the dollar index has been falling rapidly, right. So we can see here it dropped as low as 97.92 last Tuesday, at the beginning of the week, right, Monday and Tuesday, and it stabilized at around 98.30 by Tuesday and rebounded very strongly. However, it rose as high as 99.90 before fizzling out around this level here. So we can see where the pivot sits at 100.27 is a pretty strong overlap resistance, right? Because previously this was a significant bottom that was formed here in August and September of 2024, right? We see a nice double bottom being formed, right, highlighting a very strong support area here. However, right, as the dollar index was falling rapidly in mid-April, right, this level failed to hold up prices here on 11th of April. But in the following week, as the dollar index retraced a little bit higher, it did run into resistance here, close to the pivot at 100.27, creating a pretty decent overlap resistance. So the pivot is actually an overlap resistance that's also accompanied by a Fibonacci retracement at 38.2 at 38.2%, right? So take note, the pivot, right, the pivot is an overlap resistance accompanied by a Fibonacci retracement at 38.2%. Now we found this retracement beginning from this swing high here on 7th of April, going down to swing low on Monday 21st, right? You can see the 38.2% retracement sit just underneath the pivot. Higher up, there's another overlap resistance at 101.73, right? This level previously functioned as resistance back in September of last year, and then we did see it function as support in the first week of April, right? As the dollar index fell rapidly, it managed to stabilize at around 100.80, retrace a little bit higher, bouncing as high as 103.50, right? So the first resistance at 101.77 is an overlap level, and of course the first support at 98.32 is a swing low that was formed on Monday and Tuesday, right? So of course we can see that the dollar index continues to trade in a prolonged downtrend. We can clearly see a series of lower highs, lower lows, and of course it continues to trade underneath the red Ichimoku cloud, all of which highlights the ongoing bearish momentum, right? So any retracement to the upside, right, especially another climb towards the pivot, is likely to be met with strong resistance. So this is where I think the dollar index could once again fail, and then before potentially reversing to drop lower, right? So for the dollar index, right, we can probably expect it to climb a little bit higher. However, expecting it to stall once more at around the pivot, looking for potential bearish reversal, and if that reversal were to play out, we can target the first support at 98.30 as a potential take profit zone, right? So these are the key levels here for the dollar index, right? We are continuing to see it trade in a prolonged downtrend, a clear series of lower highs, lower lows, as well as trading underneath the red Ichimoku cloud, all of which highlighting to the ongoing bearish momentum. All right, now let's move on over to the euro. So of course, if the dollar index has been falling rapidly since mid-January, of course we can expect the euro to be climbing in the other direction, right? We can see here the euro jumped as high as or came very close to breaching 1.1600 on Monday 21st of April, but for most of last week we saw the euro pull back, right? We saw the euro pulling back, and where I see a strong support is at the pivot, which is at 1.1192. This is a pullback support level. Previously, this level here functioned as a multi-swing high resistance, right? There's a nice double top here that was formed in August and September of last year, and once the bullish breakout took place on 11th of April, this level is likely to function as a pullback support to the pivot, and 1.1192 is a pullback support level, right? So we can probably expect the euro to drift a little bit lower, and should it reach this level once more, this is where we can expect it to stabilize and reverse to bounce higher or resume the uptrend once again, right? For the euro, we can see that since mid-January, we can clearly see a series of higher lows and higher highs, right, highlighting the ongoing bullish momentum. In fact, there may even be a pretty decent upward channel that we can identify, right? I believe there may be even a pretty decent upward channel. Right, it's pretty decent upward channel here that highlights the ongoing bullish momentum. Right, so pivot at 1.1192 is a pullback support level. First resistance, quite clearly, is where the euro stalled last Monday and Tuesday. That's around 1.1512. And first support is another pullback level at 1.1051. We can see that as it was rising strongly in the first week of April, the euro stalled at around 1.1140, pulled back quite sharply, stabilizing around 1.0950 before surging higher once more. And then once the bullish breakout took place on Thursday, 10th of April, this resistance is likely to function as support, right? And it's also this pullback support level is also accompanied by not one but two Fibonacci levels. We have retracements at 38.2% and 61.8%. So the retracement at 38.2% was found beginning from this swing low here on 13th of Jan, going up to the swing high on the 21st of April. And for the second retracement at 61.8%, that was found beginning from this swing low on 27th of March, and of course ending with the swing high on 21st of April. Right, so we are seeing very strong bullish momentum for the euro, and if it continues to fall lower, right, we have the intersection of the upward channel, like the lower trend line of the upward channel, along with the pivot, which is a pullback level, identifying, right, a strong support area here. And should we see the euro drift back down, we're looking for potential bullish bounce, and we should see the upward momentum resume. Right, now let's take a look at dollar yen, right? Of course, since we've got the Bank of Japan releasing its monetary policy statement on Thursday, we can definitely expect extreme volatility for this currency pair. Right, the dollar yen as well has depreciated significantly, right? Just over the last 4 weeks alone, dollar yen has dropped nearly 7.5%, right? And if you look at it since mid-January, this currency pair has fallen 12%, right? You can see the yen appreciating significantly over this period, right, driving the dollar yen lower, right? It fell as low as 140.60 at the beginning of last week, finding support at a prior significant swing low, right? We can see here back in mid-September of 2024, as the dollar yen was falling rapidly between July and September of last year. The dollar yen managed to hold up around 140, dropped as low as 139.65 before stabilizing around 140.65 and then staging a very strong rebound. And this is exactly where the dollar yen stabilized once more. So as the dollar yen was falling rapidly over the last 4 weeks, right, we had identified this significant support area here, and this is where we're thinking where the dollar yen would probably stabilize and consolidate. But not only that, we actually see the strong rebound materialize on Tuesday and Wednesday, right, or pretty much for the whole of last week. Now this retracement or this rebound of 140.60, right, is likely to be met with resistance, right? We can see that the dollar yen continues to trade in a prolonged downtrend, right? We can clearly see a series of lower highs, lower lows, and we can also see, of course, that this currency pair continues to trade underneath the red Ichimoku cloud, all of which combining to identifying a strong bearish momentum. In fact, just like the euro, there's probably a nice downward channel that we can identify, right? We probably have a pretty decent downward channel to identify. It may not be the most clearest downward channel here, but you can see nevertheless that, right, we just have a couple of touches here and just one touch here, but maybe this is more of a descending trend line, right? Although the downward channel is only one touch here, but definitely we have a very clear and significant descending trend line in place. Right, so any retracement for the dollar yen to the upside is likely to be met with resistance, and where they could come in is at the pivot at 145.61. Now this is a pullback resistance level previously. This level function as support here, right? As dollar yen was falling rapidly at the end of March and beginning of April, it sort of stabilized at around 145.30. We trace higher, rebounding as high as 147.80 before stalling, and then of course dropping once again. So what was a previous support level can function as a pullback resistance at the pivot, at 145.61 is a pullback resistance that's also accompanied by a Fibonacci retracement at 50%. So we found this retracement, right, beginning from this swing high on 28th of March and ending with the swing low on 22nd of April. We can see the 50% Fibonacci retracement accompanying the pullback resistance very well, right, which is in fact the pivot. Now higher up, there's a swing high resistance that was formed in the second week of April, and that's at 147.84. Right, so once again, for the dollar yen, this currency pair probably has a little bit more room to climb higher. However, any retracement to the upside is quite likely to be met with resistance, right, since we have the pivot of pullback resistance, the descending trend line, and the 50% Fibonacci retracement, three factors identifying a pretty strong resistance barrier here. So looking for potential bearish reversal, and of course if that bearish reversal plays out, right, we're expecting it to slide towards the first support at 140.60 once again. Right, now let's move on over to the commodities. Looking at gold, right, spot gold. The ticker symbol for spot gold is XAUUSD, and of course we can see demand for this precious metal remains robust, right, just in 2025 alone, right, and especially since mid-November we have seen gold prices rise about 38%, right, since mid-November. And if you look at it since the beginning of the year, gold has rallied more than 33% as well, right? Very strong demand for this precious metal. There's no signs of demand letting up. Now we can see that the latest intraday all-time high for spot gold was made on Tuesday, 22nd of April, with prices hitting $3,500 per ounce. Right, since then, it's actually pulled back quite sharply. If you look at it here from peak to trough, gold prices dropped 6.8%, right? A pretty strong drop. And last Friday as well, it dropped down. It was hovering just above $3,260 per ounce here. Now, with very strong bullish momentum, right, I spotted a pretty decent pullback level at $3,237 per ounce. Right, so if you see gold prices drift towards this level once more, this is where I think it could stabilize before reversing to resume the uptrend. Right, so the pullback level at $3,237 is a pullback support that's also accompanied by a Fibonacci retracement at 50%. Now this retracement level was found beginning from this swing low on 7th of April, going up to the intraday all-time high on 22nd of April. Slightly below the pivot, right, which is the pullback level, we have another pullback level at 3,127. Right, we can see that previously this level functioned as a strong resistance here back in the first week of April, and we also saw gold prices pull back quite strongly in the second week of April before stabilizing around 2,981 and staging a very strong rebound. And as price made this bullish breakout on 10th of April, a prior swing high resistance now is likely to function as a pullback support level at $3,127 per ounce, and it's also accompanied by a Fibonacci retracement at 38.2%. This retracement level was found beginning from this swing low here on 14th of November, and of course ending at the swing high resistance at 22nd of April. Right, so once again we're seeing very strong bullish momentum for spot gold, and of course the green Ichimoku cloud highlights the ongoing bullish momentum. However, we've seen a very strong pullback, right, with gold prices dropping 6.8% since making this intraday all-time high on Tuesday, 22nd of April. And should we see prices continue to fall lower, I think the pivot at 3,237 is where gold could stabilize once more, and if we can hold up above this level, This may identify a pretty decent buy opportunity to try and capitalize on this bullish uptrend here. All right, now let's move on over to XTI USD. Right, this is the instrument that tracks the WTI crude oil futures, and this commodity has been facing very strong headwinds as well. Just in April itself, this commodity has dropped as much as 24%, and since mid-January, WTI oil has dropped well over 32%, right? So huge drop in price for XTI USD, right? Which is the instrument that tracks the WTI crude oil futures, right? However, after dropping as low as $54.80 per barrel in the second week of April, we saw prices sort of stabilize around $57.80 before staging a very strong rebound here. Right, we can continue to see crude prices being supported at the present moment, right, with WTI oil climbing as high as $64.50 per barrel. Right. However, any retracement to the upside is likely to be met with resistance, and where that resistance comes in is a pullback level at $65.60. Right, this level previously functioned as a very strong support. Right, we see a very nice trough being formed here in the second week of March at around $65.60. Right, very strong support level here previously, and in fact, you can actually drag it all the way till this swing low here that occurred on September 2024. So what you can see that this level previously at $65.66 previously functioned as a very significant multi-swing low support. However, once this level gave way, this support is likely to function as resistance, and that's how we've identified the pivot. And take note, it's also accompanied by a Fibonacci retracement at 61.8%. So this retracement level was found beginning from this swing high on 2nd of April, going down to the swing low on the 10th of April. Right, let me just stretch out the pivot, right, to highlight the prior multi-swing low support. So this is a very significant pullback resistance that's accompanied by a Fibonacci retracement at 61.8%. Right, and we can also see, of course, that this commodity continues to trade underneath the red Ichimoku cloud, all of which highlights the ongoing bearish momentum here. Right, so any retracement to the upside close towards $65.40 or $65.50 is likely to be met with resistance, and we can probably expect crude prices to, and if crude prices fails, right, if this retracement to the upside fails around the pivot, we've got a pretty decent opportunity to go short on crude oil once again. Right, this retracement to the upside looks like a strong bear flag that we saw here in March as well, right, between 10th of March and the 2nd of April. Right, we see a very significant bear flag being formed right here. There we go. Let me see, just get that one small. Right, okay, yep. So we can see pretty significant bear flag that was formed from 10th of March till 2nd of April. Looks a little bit similar to what's currently being formed now as well, right? You can see that once again, between 9th of April and last week, right, we've got a pretty similar bear flag as well. And if this flag gives way, right, I think we could see the downside accelerate once more. Right, looks to be building into another nice bear flag, similar between 10th of March and 2nd of April, right? And I think it's also headwinds continue to remain for this commodity, and if crude prices fail around the pivot once more, right, at $65.60, this is the pullback resistance, accompanied by Fibonacci retracement at 61.8%. If prices fails around this zone once more, we have a pretty decent opportunity to go short on crude oil once again. Right, now let's move on over to the commodities. Right, let's move on over to commodities, looking at US 30. Right, let's start with D40 first. Right, D40 is the instrument that tracks the DAX futures, and we can see that after nearly entering bear market territory on Monday, 7th of April. Right, the DAX stabilized at around $19,560 in the second, 19,580 in the second week of April, and since then, right, it's rebounded as much as 18%, a very strong rebound in the DAX. Right, and we can see that it has also broken out. Right, it has also broken out of a very significant descending trend line as well. Right, it's a pretty decent descending trend line here. Right, approximately like this descending trend line. Right, for the DAX, and after gapping higher last Wednesday, 23rd of April, we saw a very strong bullish breakout materialize, and we saw the DAX climbing very strongly. However, right, it is approaching what I see is a pretty decent overlap resistance at 22,423. Right, previously this level functioned as a nice swing low support in mid-March, and then after breaking lower in the first week of April, we see a little bit of resistance being formed here on 2nd of April, creating a pretty decent overlap resistance that's also accompanied by Fibonacci retracement at 78.6%. Right, this retracement level was found beginning from this intraday all-time high on 18th of March and ending with a swing low on 7th of April. Right, so we are, despite seeing very strong bullish momentum for the DAX, right, probably this is where we can expect it to probably fizzle out a little bit. Right, is an overlap resistance accompanied by Fibonacci retracement at 78.6%. We could probably see the DAX maybe fizzle out around the pivot, which is at 22,400, and maybe make a slight pullback as well. Right, after a very strong rebound, right, we can probably expect prices to run out of steam in the near term, and where that could happen is at 22,420, which is an overlap resistance. Higher up, right, we see a multi-swing high resistance at 23,369. Right, the first swing high resistance being formed here on 6th of March, and of course the second swing high resistance being formed on 18th of March. Right, a nice double top here. Right, and this is how the first resistance has been identified. First support, right, first support is at 21,505. This level previously functioned as resistance on 10th of April, but once the bullish breakout took place on Wednesday, 23rd, right, this resistance is likely to function as a pullback level here. Right, so these are the key levels for the 40. Right, this is the instrument that tracks the DAX futures. After rebounding very strongly since the second week of April, we've also seen the DAX break through this descending trend line, right, following a bullish breakout last Wednesday. However, right, we could probably expect the DAX maybe to run out of steam, and where that could happen is close to the pivot here at 22,400. Probably run out of steam here, make a slight pullback, drifting towards the first support before resuming the uptrend once again. Right, now let's move on over to US 500. Right, this is the instrument that tracks the S&P 500 futures, and we can see that just like the DAX, the US 500 had fallen significantly, right, almost entering bear market territory, or briefly entering bear market territory on 7th of April. Right, we can see here US 500 falling nearly 22% from peak to trough. However, it stabilized at around 4,980 in the second week of April, rebounded very sharply, stalling at 5,550 in mid-April, pulling back once more, and then rising and rebounding sharply last week as well. However, it is approaching or is trading very close to what I see is a pullback resistance at 5,534, which is where the pivot has been identified. Right, previously back in mid-March, this level at 5,534 functioned as a significant swing low support on 12th of March, and then it helped hold up prices once more at the end of March as well. Right, so this level was previously like a nice double bottom, a significant multi-swing low support, which looks to be functioning as a potential resistance barrier here. Right, so despite US 500 rebounding very sharply last week, right, we've seen a very sharp reversal since last week. However, we could see this instrument probably run out of steam as well, maybe fizzling out at around 5,534, and it could slide lower towards the first support. First support is a swing low level at 5,151. It's also accompanied by a Fibonacci retracement at 50%. Oh, actually, hang on, we can't use this retracement level anymore as price has broken higher. Apologies, we can't use this retracement here. Right, take note that the first support at 5,151 is a swing low that was formed on Monday and Tuesday, 21st and 22nd of April. That's what we've seen US 500 rebound as much as 15% since the lows on 7th of April. However, right, it has also broken out of its own descending trend line, if I'm not mistaken, or it's attempting to. Yes, it did make a bullish breakout as well, right? We can see this significant descending trend line being broken last Friday, 25th of April. So we've seen a nice bullish breakout materialize last Friday through this descending trend line, right? Maybe that momentum could continue this week. However, right, as the pivot is a pretty strong pullback resistance, right? Pretty strong pullback resistance. This is where I think we could see a little bit of headwind for US 500. Okay, with that, now let's move on over to crypto. Let's take a look at Bitcoin. Bitcoin has rebounded very strongly as well, right? Since making its latest intraday all-time high on Monday, 20th of Jan, and at around $109,550. This coin has dropped as much as 32%, right, falling into bear market territory by the second week of April. However, since then, Bitcoin has rebounded sharply as well, rising as high as 29% on Friday, 25th of April, right? However, it looks to be stalling at around the pivot, right? The pivot at 94,852 is actually an overlap resistance. We can see that previously this level functioned as a nice support between 8th of Feb and 23rd of Feb, and then after giving way right at the end of February, we see Bitcoin rebounding sharply in the first week of March. However, it stalls pretty much at exactly 94,852. So when it stalls here, right, runs into resistance here, it creates an overlap level that we can identify as the pivot, right, as a potential resistance barrier, which is also accompanied by a Fibonacci retracement at 61.8%. We found this retracement beginning from the intraday all-time high on 20th of Jan and ending with a swing low on 7th of April. As you can see that Bitcoin looks to be stalling at a very critical overlap resistance that's accompanied by a Fibonacci retracement at 61.8%, right? After a very strong rebound since 7th of April, prices look to be consolidating around the pivot here. So should we see prices fail, it could drift a little bit lower here. And the first support comes in at 88,147. Right, this level previously functioned as a swing high resistance, right, like a multi-swing high resistance at the end of March and early April. And then when price made a bullish breakout on 22nd of April, this level is likely to function as a pullback support area at 88,147, and it's also accompanied by a Fibonacci retracement at 38.2%. Right, so this retracement was found beginning from this swing low on 7th of April, going up to the high here on 25th of April. Right, so over the weekend, Bitcoin prices has stalled around overlap resistance, could drift down towards a pullback level at 88,147, which is accompanied by a Fibonacci retracement at 38.2%. And in resistance, of course, resistance is coming in at 106 and 44,000. Right, this is a multi-swing high resistance, with the first swing high being formed in December of 2024, mid-December, and the second swing high resistance being formed in the third week of January. Alright, hi Watson, great to see you as well. Thanks for tuning in. Right, so a very strong rebound for Bitcoin since 7th of April, right? jumping as high as 29%, but it looks to be running out of steam close to the pivot, right? The pivot at 94,852 is an overlap resistance, accompanied by a Fibonacci retracement at 61.8%. Looking at Ethereum, right? Ethereum continues to remain in a strong downtrend, right? We can see Ethereum remaining in a strong downtrend. Hang on, this is not first resistance. First resistance should be a little bit higher up. First support. There's a nice overlap here. Okay, there we go. Right, okay, so for Ethereum, we can see that it's clearly been trading in a prolonged downtrend since December of last year. Right, we can clearly see a series of lower highs, lower lows, and after stabilizing at around 1,456 in mid April, prices were just moving sideways pretty much for most of April before jumping slightly higher last week. And then any retracement to the upside, right, is likely to be met with strong resistance, right? We can see that this coin continues to trade underneath the red Ichimoku cloud, and the pivot at 2,102 is a very strong overlap resistance, right? It's a very strong overlap resistance because we can see support being formed here first, nice base being formed here in first week of March. Then we see resistance being formed at the end of March, creating a very nice overlap level. Similarly to this overlap at 2,519, it's a nice base being formed here in the second week of Feb, and then of course we can see Ethereum running the resistance in the first week of March. Right, let's see if there's a couple of retracement levels that we can identify. Right, let's see there's some retracements that we could use on this downtrend. Alright, I guess we can see the 23.6% retracement sitting pretty close to the pivot. 38 as well there, so I guess probably we can use these two retracements to accompany the pivot and the first resistance. Alright, hi Watson, what do you mean by on-off on Sundays? Yeah, the pre-market live analysis session runs every Sunday, right? Which is at 8 p.m. GMT time, right? So it runs every Sunday, 8 p.m. GMT time, every Sunday, right? We just rotate among the presenters, if that's what you're meaning, right? Yeah, there's about 2 or 3 of us that rotate for the pre-market analysis session. All right, okay, so that's Bitcoin as well. All right, since we've covered most of the major currency pairs, we've covered the dollar index, commodities, gold, crude oil, and the indices as well, the DAX and US 500, and we just covered crypto, right? Is there anything else that you guys would like to see? If not, if there's no further requests, then maybe we can touch on a few more of the currency pairs, and we can touch on US Tech as well, right? US Tech is the instrument that tracks the Nasdaq 100 futures here, and we can also see, right, a very similar market structure to US 500, right? You see a very similar market structure to US 500, and I believe this instrument has broken out of this very significant descending trend line, right? There's a very significant descending trend line in place, and we saw a nice bullish breakout take place last Thursday, 24th of April, right? For US Tech, it had dropped as much as 26% peak to trough, right? And since 7th of April, of course, it has rebounded as high as 19% as of last Friday. Right, so we can see that it is rising up, right, towards what I see is overlap resistance, right? It's a pretty decent overlap resistance at 20,332, which you can identify as the pivot here, right? Previously, this level functioned as a nice swing low support back in November of 2024, and then it sort of functioned as it prices consolidated here as well. US tech stabilized at around 20,300 in the first week of March before finally giving way, but we can see very clearly a resistance being formed here right at the end of March. So this creates a very nice overlap level that we can identify as the pivot, and this is where we can probably expect US tech to probably run into some headwinds should we see this strong momentum, bullish momentum continue. And we can probably expect it to run into a little bit of headwinds here should we see this nice bullish breakout gain further traction. Right, so the pivot at 20,322 is an overlap resistance. I believe there's also a Fibonacci retracement that we can use beginning from 18th of Feb going down to the 7th of April. Let's take a look at all the fibs. We can see US tech has climbed above the retracements from 23 to 50%. However, 61.8% is sort of sitting in no man's land, but I would just like to keep it on here as well, right? 61% being the golden ratio, right? It's a level to keep an eye on as well, right? We can probably expect this bullish momentum to gain further traction this week, rising up towards 20,000, where the 61.8% Fibonacci retracement sits. We can probably expect some headwinds around this level here, right? In terms of resistance, another resistance beyond the pivot, we would see nothing really clear cut in between, but apart from this multi-swing high resistance at 22,142, right? I don't really see any other clear obvious resistance here. And in terms of support, there was previously an overlap level, right? There's a pretty decent overlap level at 19,197, right? Previously this level had functioned as support in mid-March and support at the end of March as well, and then functioning as very strong resistance in mid-April. So this previously created a very nice overlap resistance, and with price making a bullish breakout last week, right, this resistance now, prior resistance, is likely to function as a pullback support. So that's how we've identified the first support for US tech, and that sits at 19,197. Right, so these are the key levels here for US tech, right? It has broken out of a very significant descending trend line last Thursday, and the bullish momentum continued last Friday as well, as it broke through a prior overlap resistance at 19,197, and the prior resistance now can be used as a potential support area, a pullback support area, and of course should we see US tech gain further traction this week, where it could see some serious headwinds, would be between the 61.8% Fibonacci retracement and the pivot, which is an overlap resistance. Yes, hi Watson. We've covered the euro as well, but since we've got a little bit of time, I'd be more than happy to go through this currency pair once again. Right, with the US dollar seeing no love, right? If you look at the dollar index, right, dollar index has fallen rapidly since mid-January, right? As investors dump the dollar, this index of course is going to fall rapidly, and that in turn has seen a lot of strong bids for the euro, with this currency pair bouncing or rebounding, with this currency pair rallying as much as 7.8% since the end of March, and since mid-Jan this currency pair has rallied as much as 13%, right? So very strong bullish momentum for the euro. And after stalling at around 1.1600 last week, it was pulling back. It dropped quite sharply, right? If you look at it from this peak on 21st of March to the lowest point of last Thursday, the euro dropped as much as 2.3%. And if we do see this currency pair slide even lower, I see a very strong pullback level at 1.1192, right? The pivot is a pullback support level, and the intersection with the lower trend line of the upward channel identifies a pretty strong support area. right? So should we see the euro drift lower at the beginning of the week, right? Should we see the euro drift lower at the beginning of the week, right? This intersection here highlights a very strong support area, and if prices can stabilize around this zone, it can help us identify a pretty decent opportunity to go long on this currency pair once more. So the pivot is a pullback support level at 1.1192, slightly below. 1.1050 is another pullback level that's accompanied by not one but two Fibonacci retracements, right? The first retracement at 38.2% was found beginning from this swing low on 13th of Jan, going up to the swing high on 21st of April, and the second retracement at 61.8% was found from this swing low on 27th of March. Right, so we are seeing very strong bullish momentum for the euro. As of course, it continues to trade above the green Ichimoku cloud, both of which are rising. So any pullback here, right, it could be identified as a decent opportunity to go long on the euro once more. So should we see the euro drift towards 1.1192 once more and hold up here, right? If prices can hold up around this level, it helps us identify a pretty decent long opportunity once more. All right, okay. So these are the key these are the key levels for the euro here on a daily time frame. Right? And what's anything else you'd like to see as well? Right, since we still got some time, I'd be more than happy to uh, cover any of the instruments that you have missed out on. Right, otherwise, let's see. We've not touched on the Aussie. Let's take a look at the Aussie. Right, after dropping sharply in the first week of April, right, the Aussie has rebounded strongly, very strongly since then. And we can see that in the first week of April, the Aussie dropped as much as 7.4%, but since then it has recovered all those losses, climbing as high as 64.30 and sort of stalling around this level here. So very clearly, the first resistance for the Aussie comes in around 64.54. It's an overlap resistance. Right? It's a pretty decent overlap resistance that's accompanied by Fibonacci retracement at 50%. Now, of course, this retracement was found beginning from this swing high on 30th of September, going down to the swing low here on 9th of April. Right, it's a very strong overlap resistance. And the pivot is actually a pullback support level at 63.28. This level previously was the resistance here in the first week of April. Then after breaking higher in mid-April, this level is likely to function as support. So pivot at 63.28 is a pullback support level, and beyond that there's a nice swing low that was formed here on 3rd of March. This is where we can identify the first support at 62 cents. The pivot is also accompanied by a Fibonacci retracement at 23.6%. Right, so we found the retracement, of course, beginning from this swing low on 9th of April, going up to the high on 22nd of April. Right, so should we see the Aussie drift towards the pivot once more? Right, if we can stabilize here, this is where we can identify a pretty decent opportunity to go long on the Aussie once more. And should we see that rebound materialize, we can target the first resistance as a potential take profit zone. Right, then let's take a look at dollar franc. Right, we've seen demand for safe haven currencies such as the franc and Japanese yen gain significantly since February. Right, just over the last 4 weeks, Swiss franc has gained more than 9%, right, causing the dollar franc to tank under 81. And since mid-January, right, we can see the dollar franc falling as much as 13%. Now, dollar franc rebounded very strongly last week. However, I see a very strong potential resistance barrier at 8,400. This level previously functioned as a very strong support level. We can see almost like a quadruple bottom being formed here back between 29th of August and 30th of September. So what was previously a very strong support level could function as a pullback resistance, which is where the pivot has been identified. And in terms of resistance, right, there's a nice swing high resistance being formed here, right? Nice swing high resistance being formed at around 86.04. And of course, the first support is the swing low that was formed on Monday and Tuesday, 21st and 22nd of April. That sits around 80.82. Let's see if there's a Fibonacci retracement that we could use. Let's try it out, beginning from this swing high on 13th of Jan, going down to the swing low on 21st of April. Let's take a look at all the fibs. Right, we can see the 50% retracement sitting pretty close to the first resistance, so let's keep that. And the other retracements are in no man's land, so that's fine. So once again, right, we can see that this currency pair continues to trade in a prolonged downtrend. It continues to trade underneath the red Ichimoku cloud, which highlights the ongoing bearish momentum. Despite seeing a pretty strong rebound here last week, right, I think the dollar franc could once again stall close to the pivot at 8,400, which is a pullback resistance here. All right, Watson. Okay, great. We can wrap things up by looking at US 30. Right, US 30 is the instrument that tracks the Dow Jones futures, and right, very similar structure to the US 500 and US Tech. So US 30, right, had dropped as much as 19% since the end of January, right, dropping 19%, nearly entering bear market territory before rebounding very strongly, and as of last Friday, rebounding about 10%. However, we can see that this index continues to remain restricted under a pretty significant descending trend line, right? I can spot a pretty decent descending trend line for US 30, and of course it continues to trade underneath the red Ichimoku cloud, and the pivot is actually a very significant overlap resistance. 40,856 is the overlap resistance. Previously, this level functioned as a significant swing low support in mid-March, and then after that we can see resistance being formed between 9th of April and 16th of April, so very significant overlap level. That's accompanied by a Fibonacci retracement at 50%. This retracement was found beginning from this swing high on 31st of Jan and going down to the swing low on 7th of April. Right, so despite seeing a pretty strong rebound for US 30, right, we have the intersection of the pivot, which is an overlap resistance, the descending trend line, and the 50% Fibonacci retracement, all highlighting a very strong resistance barrier here. So should we see this index reach towards the pivot, this is where I think it could fail once more and perhaps drift a little bit lower. Now, first support comes in at this swing low that was formed on Monday and Tuesday. That's at 38,100. And of course, beyond the pivot, which is an overlap resistance, we have a swing high resistance that was formed here at the end of March, and that's at 42,588. Right, these are the key levels for US 30, right? Very similar market structure to the others US indices, but one thing to take note, that for US 500 and US Tech, both of these indices have broken above their respective descending trend lines. We're seeing much stronger bullish momentum for US Tech and US 500 as compared to US 30, right? We can see US 30 continues to remain underneath its descending trend line, so the momentum is significantly is noticeably lower, right? The bullish momentum is noticeably lower as compared to US 500 and US Tech. Alright, so that brings us to the end of today's session, and before I wrap up, just going to launch a quick poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll just wrap up today's session. Well, we take a quick look at the calendar once more, and then we'll call it an end. Alright, okay, so coming back to the calendar, Right, take note, there's quite a few things going on here, and the time displayed on this calendar is on GMT time, right? We've got quite a few things going on, but I want to bring your attention to the interest rate decision that's going to take place by the Bank of Japan on Thursday, 1st of May. Right, that's sandwiched in between two important employment data reports from the US. We have the ADP reporting private payrolls growth on Wednesday, 30th of April, and the Bureau of Labor Statistics will release the highly anticipated non-farm payrolls report and the unemployment rate on Friday, 2nd of May. Right, so ADP drops on Wednesday, 12:15 p.m. GMT time. After rising 155,000 in March, we're expected to see 123,000 private jobs being added in April. And then on Friday at 12:30 p.m. GMT time, non-farm payrolls is expected to grow by 129,000 after rising strongly in March as well. So we're seeing job gains once more, but at a slightly slower pace for both the ADP and BLS reports. And we also expected to see the unemployment rate remain unchanged at 4.2%. Sandwiched in between, the Bank of Japan is likely to maintain its key policy rate at 0.5%. And then the press conference by Governor Kazuo Ueda will commence later on as well. Take note, the Bank of Japan does not specify the exact release of the monetary policy statement and the commencement of the press conference, but we can expect all of these to take place between 2 and 4 a.m. GMT on Thursday, 1st of April. Alright, so that brings us to the end of today's webinar. Right, thanks for tuning in to today's session brought to you by IC Markets. Right, and do look out for all upcoming webinars for this week. Right, we got a combination of educational topics and live analysis in English, Thai, and Bahasa. So do look out for that as we kick off the brand new trading week. All right, wish you all the best in your trading journey, and looking forward to catching all of you at the next session. Right, take care and see you guys soon.